Have you ever wondered how a simple document can hold the key to a company's financial integrity? In today's instructional journey, we dive deep into understanding supporting documentation in financial accounting, a critical component that ensures data accuracy, safeguards against errors and fraud, and ultimately builds trust among stakeholders. Imagine opening up your financial records and finding each number, digit, and transaction flawlessly aligned with verified source documents. This is not just theory, it is best practice that every successful organization relies on. At the start of the accounting process, every financial transaction begins its life as a source document. These documents include physical bills, electronic invoices, bank statements, and even business contracts such as leasing agreements. Although they may appear straightforward at first glance, these papers and digital files form the backbone of financial transparency. When stored securely and backed up appropriately, they not only provide a reliable reference for every recorded move, but also protect the organization from inconsistencies and errors that could disrupt financial reporting. The importance of source documents cannot be overstated. They verify that every transaction is accurate and authentic, and reflect true values by displaying amounts in both words and figures. Imagine entering a large transaction in your ledger only to discover a misplaced digit due to an untampered document. It is a scenario no business wants to face. Maintaining secure and accurate documentation verifies that the data in your financial records faithfully represents your business's cash flows, operational reality, and liquidity. Our journey then brings us to the concept of financial record keeping, a critical mechanism that connects raw financial data with carefully prepared financial statements, such as income statements, balance sheets, and cash flow reports. The process of keeping these records is often segmented into what can be thought of as a 7-step accounting cycle. It is a journey from raw transaction data to a polished and comprehensible financial statement that senior management and stakeholders can rely on. Let's now break down these 7 vital steps that form the core of financial bookkeeping. The process starts with identifying financial information. In a bustling organization, the first task is to gather all relevant source documents. Picture the organized stacks of invoices, bank statements, and petty cash registers, all waiting to be processed. These documents are then segregated into financial and non-financial categories. For financial documents, further categorization follows, often grouping items related to purchases, inventories, expenses, and sales. Each of these groups plays a unique role in shaping the overall financial picture of the organization. Once the financial documents are diligently sorted, the next step is to check transactions for accuracy. This verification process is essential. It ensures that the financial data is free of errors and completely authentic. Verification can involve internal cross-checks as well as third-party validations from vendors or other external sources. Consider this step as a meticulous inspection that ensures that the money reflected in your records is not just a number, it is a true representation of your business's operations. After verifying each transaction, the accounting process moves towards collating the financial data. This step, while seemingly administrative, is crucial because organizing raw data correctly helps streamline the entire recording process. Think of it as laying out the puzzle pieces in order so they can fit together seamlessly. With the data now organized, the next task is to record journal entries. Here, every verified piece of information is carefully documented in the journal, using standardized accounting principles. Following journal entries, the entries are transposed into ledger accounts, a critical bridge between initial data capture and the final financial statements. This transposition ensures that every entry is correctly aligned under its respective account category. When the accounting period draws to a close, the closing balances of each ledger account are then transferred into the trial balance. This summarized view is not just a checkpoint, It is a foundational step that consolidates the entire data processing lifecycle into a manageable format. With the trial balance prepared, accountants then move to generate financial statements. These include the profit and loss statement, the balance sheet, and the cash flow statement. Together, these statements provide a complete and accurate picture of the business's financial operations and health. They are not mere documents. They are narratives that tell the story of a business's financial journey over a given period. Throughout this entire cycle, organizational policies and procedures play an indispensable role. Every company adapts this cycle to its unique requirements, whether through choices like accrual versus cash accounting, or selecting between single and double entry systems. These decisions are impacted by the organization's size, nature of operations, and specific internal controls. Moreover, the choice of accounting software, such as Xero, a widely recognized tool in financial management, further refines and customizes the process. Employees are trained to record, manage, and verify financial information using such systems, ensuring that every step of the process adheres to standard operating procedures. One of the most dynamic aspects of this process is examining supporting documentation to establish both accuracy and completeness. At this stage, the true test of the system's reliability comes forth. Accountants compare the recorded data against the source documents, scrutinizing each detail for any discrepancies or errors. The authenticity of every transaction is verified, ensuring that the amounts in words and figures are consistent. If any inconsistency is discovered, the document is flagged and rechecking is performed to correct any mistake. This careful examination ensures that every financial record is not only accurate but also complete, with each supporting document certified by a responsible accountant. This certification acts as a seal of approval that the information is reliable and meets strict standards of internal controls. Imagine the confidence instilled in business operations when every document is verified, every entry checked, and every process meticulously followed. This adherence to best practices in financial record keeping bolsters not only the reliability of the financial reports, but also the overall operational stability of the business. Moreover, adhering to these practices forms an integral part of organizational compliance, ensuring that both internal and external audits can rely on the published records. However, the process is not without its challenges. Many organizations face difficulties in the decision between various accounting models. The choice between accrual accounting and cash accounting, or deciding whether to employ a single or double entry system, can create tension in the workflow. Each option has its own set of complexities and implications. For example, double entry systems, while providing a more thorough accounting framework, require meticulous attention to detail and a robust internal control system. The challenge intensifies when organizations are in the process of selecting the right accounting software to support their unique needs. Yet, a clear understanding of the process and adherence to strict documentation protocols can overcome these hurdles and simplify the entire procedure. At this point, let's pause and reflect on the key message. Supporting documentation and its verification is more than a routine task. It is the safeguard of financial clarity and accountability. The principles discussed, from segregating financial documents to computing trial balances, are designed to provide a transparent, accurate, and secure way of managing financial data. Each step interlocks with the next to form a cohesive system that not only meets the requirements of organizational policies, but also builds a foundation of trust with stakeholders and auditors alike. As we near the end of this instructional guide, consider how the methodical process of verifying supporting documentation contributes to the larger goal of financial transparency. When stakeholders review a company's financial statements, they are not just reading numbers on a page. They are witnessing the outcome of a rigorous process where every document, every verification, and every step contributes to a trustworthy financial narrative. Take a moment to appreciate the role of every employee involved in this process. From the diligent professionals who collect and segregate source documents, to the careful accountants who record journal entries and transcribe ledger accounts, each one plays a vital role in maintaining the integrity of financial records. Their adherence to standard operating procedures ensures that financial data remains reliable and reflective of the true financial position of the organization. This commitment to excellence in the field of accounting not only supports business objectives, but also builds lasting relationships based on trust and transparency. The significance of digital transformation in this arena cannot be ignored. Today's businesses increasingly rely on advanced accounting software to streamline these processes, reduce manual errors, and facilitate quick and accurate financial reporting. A robust software solution like Xero integrates these complex tasks into a single user-friendly platform that ensures accuracy and efficiency. As organizations navigate the often challenging waters of financial management, leveraging these modern tools can lead to not only improved accuracy in bookkeeping, but also enhanced operational efficiency. In conclusion, supporting documentation is the heartbeat of financial accountancy. It connects the dots between countless transactions and the comprehensive financial statements that businesses rely on daily. This process of collecting, verifying, transcribing, and finally consolidating financial data is a testament to the discipline, precision, and perseverance necessary in the world of accounting. Remember, the integrity of your financial accounting largely depends on the robustness of your supporting documentation protocols. When your financial records are accurate, when every source document is verified and securely maintained, you ensure that the true picture of your financial health is always on display. To maintain transparency and build lasting trust with internal and external stakeholders, it is crucial to take these steps seriously. As you leave this instructional journey, take with you the understanding that every verified document, every transcribed ledger, and every accurately prepared financial statement plays a crucial role in the overall financial stability of your organization. Ensure your accounting records are accurate by routinely verifying and safeguarding your source documents, and consider exploring accounting software like Xero for efficient financial management.